only on Bloomberg Quint.
Welcome. You're watching Countdown right here on Bloomberg Quint. A softer start for this week. After gaining almost more than 0.5% in last week's trade, the start of this week has given up about closer to 0.75% on the indices. We'll talk about the internals in just a few moments, but let's run you through the headlines. We're starting off with a correction in the market which spills into the third day. The Nifty falls below its 50-day moving average towards the 10,700 mark. Infosys is amongst the top gainers on the Nifty after its third quarter results. Brokerages also remain upbeat on the company's prospects. Avenue Supermarts falls the most since listing after its disappointing third quarter performance. Futures have seen fresh short positions. And Federal Bank is among the top broader market losers after the company's ED Ganesh Shankran stepped down from his post. Neeraj, good afternoon. The tepid start to the week though.
Yeah, tepid start. If it's any solace, we are off the lows of the day, but well, that's only solace as they say, because it's still struggling about 0.75% in the red, 10,714 for the Nifty. The broader markets too not performing as well in the session today. To be anticipated, so about 0.5% or slightly over 0.5% for the mid caps, 0.5% for the small cap space, and the market breadth not looking all that great. Let's take a look at what the heat map is showing us, because it's 2:1 on the mid caps or the broader markets, but much worse when it comes to the Nifty. Yes Bank, a bit of a lone ranger, 6.5% higher. Infosys about 2.5%. Bharti Infra about 1.5%. Look at the losers though. IndusInd Bank, L&T, GAIL, Wipro. Tech Mahindra is about 2% lower. JSW Steel a couple of percentage points lower. Vedanta a couple of percentage points lower. So commodities have taken it on the chin. Selectively, even financials are looking slightly soft. But yeah, not the best of days when it comes to large caps. 2 or 3 names to watch out for. Wipro 4.5% higher, and I believe the margin compression in TCS and Infosys and maybe some other factors weighing in on the minds of investors when they're looking at the IT names. But if large caps are a sorry state, mid caps, while just down 0.5%, there are a few which are biting the dust.
Well, quite a few actually. Most of them looking, and the ones that I'm highlighting have seen some sharp cuts coming about this time around. I'm going to talk about a few stocks in focus, and the first one obviously being Avenue Supermarts, and post the results that they have posted, the stock has been given a thumbs down, about 9%. Remember, this is a very expensive stock. So for a company like this, the results are prime importance. So you've got to beat the street expectations in order for you to maintain those levels. So you've got a 9% cut, a heavy disappointment coming in the margins front for Avenue Supermart. Praj Industries, this has been a constant winner the last week. The stock has piled up gains anywhere between about 25 to 30%. Today also adding on to that 7%. Jet Airways, some talks about a resolution and some money from Etihad leads the stock to move up higher. Remember, 21st of January, that's the date that they have to look at with regards to some amount of resolution and how they're going to raise money. That's going to be in focus. Aside from that, other movers in trade include the likes of Stride Sushun. The stock's up about 7%. Vakrangi, this one's been on a tear, and every single day you've been seeing gains of closer to 5% post receiving that clean shit. But again, a very difficult stock to trade, so need to be a little careful out there. Godrej Properties, 2.5% higher, looks strong, and within the real estate basket has been one of the outperformers. Volume buzzers, ever ready, that's one stock that's doing well. On Friday session also did very good for itself, in fact, and today as well added another 5%. 17.5 lakh shares traded. Symphony with 5% gains trades about 16.5 lakh shares. Karnataka Bank 3.5% higher, and that trades 41 lakh shares. Stocks near their 52-week high. You've got an Aarti Industries that's, I think, 1% short of its 52-week high, and a Linde India that's, I think, another 2% short of its 52-week high. So, going to watch out for these two stocks in today's session as well as the coming few days of trade. Back to the futures and options space and what's happening in the more liquid universe. We've got Agam Bakil, who's joining in right now with a quick update on that. Agam, good afternoon.
Good afternoon. Well, 3 straight days of losses. Short positions continue to build in the futures, with the Nifty declining by around 0.8%. 2% added towards fresh shorts in the Nifty banking futures. Well, the picture isn't very different. In fact, here the accumulation is a little more, up 6% in open interest. Your India Volatility Index has now risen and it's moved back about the mark of 16.25 to be precise. And this is largely on account of option premiums expanding considering the volatility. And based on that, we've seen more writing around the 10,800, 10,900 and 11,000 calls, even as the Nifty loses the 10,800 mark at this point. Not too much change with respect to the range in the Nifty, but do remember there is considerable resistance building around 10,900 and 11,000 marks, so we'll be watching out for that. In terms of stocks, 2 stocks on the advancing end, Strides, which has seen a 33% increase in OI, even as the underlying advances by around 8%, so longs there. And we're also seeing longs in Castrol India, which is also seeing some strength come through on the back of open interest build-up. On the losing end, however, Arvind continues to remain under pressure. A lot of shorts building up there, even as the underlying declines 3%. And Gale is the other one, where your open interest has spiked by as much as 12%. So mixed cues coming in the futures and options space, even as the benchmark indices continue to trade in the negative for now.
Okay, Agam, thanks for putting this into perspective. Well, let's get in. Let's begin the show with Global Voice. Craig Erlam, the senior market analyst at OANDA, joins us right now on the show with his thoughts on what to watch out for. Craig, good having you. Thanks much for joining. I guess from where you are sitting, the thing to watch out for has to be what happens tomorrow in the UK. Brexit, no Brexit, the impact that markets, both currency and equity markets, have to brace themselves for.
Absolutely. It's hard to look past Brexit at this moment in time, and I think this is going to be such a pivotal week. We have the vote tomorrow in Parliament, where MPs will finally get the opportunity to have their say on Theresa May's Brexit deal, assuming, of course, she doesn't pull the vote late on in the day as she did back in December. Right now, it looks as though it's going to suffer quite a heavy defeat, and that opens up all kinds of doors for the rest of the week. Rather than have 3 weeks to come back with a plan B to Parliament, she now has 3 days, thanks to a defeat last week. There's also likely or potentially going to be a vote of no confidence in the government led by the opposition Labour Party. Theresa May's position itself will come under scrutiny, and obviously eyes will also be on Brussels, because if we do see a heavy defeat, Brussels doesn't want a no deal either, so we're going to see just what its position is going to be and how much more clarity they can offer to UK MPs in order to try and get this deal over the line. So I think it's going to be a very, very busy week, and therefore plenty of volatility for UK assets, particularly the pound, but also the FTSE as well.
How are you watching equity markets by and large? I mean, FTSE may have reasons of its own to react whichever way it does over the course of the next few days. What about some of the other European markets or the emerging markets that you may be tracking closely? Because almost every market seems to be in a state of a flux. The mother market, which is the US market, getting worried with what would happen to growth now, and that showing in on the rates or the movements of some of the other markets as well.
Yes, so it's been quite a good week for the markets, I think it's safe to say. A culmination of factors has been supportive for risk appetite. Most notably, you would have to say, being the US trade talks with China, the fact that it extended last week into a 3rd day. The commentary from both sides was very positive and suggests that when we get towards the end of this 90-day period, at the very least, it would seem there's going to be an extension and some form of positive commitment on tariffs. The other factor, of course, is the US Federal Reserve. We've repeatedly heard them stress now how flexible they are going to be, and that is a massive positive for global markets. And I think this is one area where emerging markets are set to benefit most. We saw last year the impact that a stronger dollar had on many emerging markets, and it was making its way across initially some of the weaker emerging markets, but then even passing through to some of the stronger emerging market countries. And I think India was a prime example of this. This year we're expecting to see a softer dollar. The Fed is more dovish, and I think that is broadly positive for risk sentiment. And should that continue this year, I think we are going to see various emerging markets perform positively, and I think lower oil prices is again another supporting factor in this.
Greg, good afternoon to you from India. Just want to know, we've got the jobs data coming out from the US on the 4th of January. So we've got a good 1 week for the markets to digest the extremely strong job reports numbers that came out. But yet, market participants are of the belief that the Fed is actually going to stop taking any further rate hikes for the year. The difference of opinion here between the jobs numbers as well as the market watchers' opinion that there'll be no further hikes, the resolution of that, is that going to be important to probably guide investment for 2019?
I think it's going to be crucial in the first quarter. Risk appetite in the fourth quarter of last year was severely shaken by this dual combination of weaker economic growth expectations, particularly for 2019 going into 2020, and the prospect that the Federal Reserve was going to continue to tighten at the same pace. The combination of those two really did have negative implications. We've now seen the inverse of this be true. I think heading into Christmas in low liquid markets, the market overreacted. I think that's safe to say. At the very start of this year, the markets were pricing in a 0% chance of a rate hike this year, and actually a 1% chance of 3 rate cuts this year. That just showed how pessimistic investors became. Now we've seen that really strong jobs report. That's not to say that all those growth fears for this year were wrong. I still think we are going to see a slowdown in growth, but it's not necessarily going to be as bad as people were beginning to fear. And that shift in the Fed provides a nice balance. The Fed has given itself the opportunity in raising rates over the last few years to allow itself to slow down without risking the economic outlook for the economy, and giving itself plenty of position and flexibility should they see a downturn. And like I say, this is a perfect combination as far as markets are concerned, because right now investors, you would think, have more than enough to worry about without worrying about the central bank inducing a recession of its own.
What are bond watchers, talking about when you look at the differential between the 2-year and the 10-year bond rates? 16 basis points, it's been one of the lowest that we've seen between the shorter dated as well as the longer dated bonds.
Yes, I mean, this is typically your recession warning. We saw the inversion in the yield curve between 3 and 5 years towards the back end of last year. People wondering whether this was going to stretch out to 2 and 10, because that would be typically your recession warning. Instead, it hasn't yet materialised. The gap is shortening, but I still think these fears are maybe a little bit overblown. Yes, we are going to see a slowdown this year. It may even necessitate the Fed to cut interest rates slightly next year. But this idea that we're suddenly headed for a recession seems a bit overdone to me. And if we can see the first half of the year pass without too much panic, and we can see the data improve, then I think that inversion will reverse itself. The reason why I say the first half rather than the first quarter is because the first quarter can be less positive from an economic data standpoint, particularly where the US is concerned, whether that is an issue with the way the data is collected or smoothed out, or whether it's just simply the fact that the fourth quarter of the year is so strong for the US economy due to heavy consumer input. I'm not entirely sure, but we do tend to see a softer first quarter. So I think this, while we have seen a bounce back in the last week, I do still think markets are vulnerable to more downside over the next couple of months. And then if we can start to see a stronger rebound in Q2, then I think that will start to soften expectations for recessions and rate cuts.
Got that. We leave it at that, Craig. Thanks very much for joining us. Really appreciate you taking out the time this afternoon. All right, that's global view coming in there. Moving on, the pace of order wins in the industrial segment has slowed down in the December quarter, according to Investec. While orders in the power and NHAI space remain weak, BHEL has announced only 1 order in the quarter. What are the factors behind the same? Let's discuss this with Aditya Bhartia, research analyst at Investec Capital Services. Aditya, thanks very much for taking out the time. And that seems to be the concern now when we are talking about the cap goods space and the kind of orders that have been coming in and the pace which is slowed down quite significantly. How big a risk is this?
Hi Devina, thanks for having me on the show. So yes, you rightly pointed out that pace of order flows has slowed down in Q3, but this follows a very strong H1 that we had seen earlier in the year. Now what has happened is that there are a couple of sectors which have remained weak, something like highway awards from NHAI or power generation and power transmission and distribution orders. On the other hand, there were certain sectors which had been very strong in H1, like state roads or water, which have also eased a bit in Q3. Now this is not really surprising. We are heading into elections, so there is a possibility that order flow pace could remain a bit weak going forward as well. But the moment you look at 9-month awards and look at the picture in totality, we have still seen very strong order flows coming through. And the interesting part is that a lot of these orders are driven by state governments. So we have seen reduced reliance on central government, and private sector continues to be weak with states driving these orders.
Right. With regards to, we know when we're talking about even NHAI and the orders thereabouts remaining weak, we've seen also targets falling short by almost 50% for the year. Now, we don't know at the pace of which will, whether that will pick up or no, and the new awards will come in. But do you see that raising red flags right now? Because that's been a concern and it continues to weigh down on some of these infra names.
Mm-hmm. That's true. NHAI ordering in the whole of these 9 months has been fairly sluggish. But if we go back to last year as well, we saw NHAI orders being clustered around fourth quarter, with a lot of orders actually getting placed in last 2 to 3 weeks. When we look at the pipeline of orders, it still appears to be fairly strong, while targets are aggressive and could get missed. But nonetheless, in fourth quarter, we may see an improvement in the pace of orders by NHAI.
Okay. Would you believe that, for the different parameters, Aditya, there could be different issues that could be ailing. In certain cases, I think company after company has come and said that land availability is a big issue for us, and with the new norms coming in, until that 80% or 100% procurement is done, we can't start projects, so on and so forth. So that was an issue. For certain other projects, there might be other issues. What is that big ailing issue which hurts the larger portion, and if something can be done to resolve this, or do you reckon that for now the abysmal pace that we're seeing of ordering and execution, save for highways, will continue?
Mm-hmm. No, we do anticipate a pickup in order flows in fourth quarter in NHAI highways, though it may still fall short of the targets that the agency had set at the beginning of the year. Now, in terms of constraints, you rightly pointed out that right-of-way or land acquisition is a huge challenge, and that is something that has been delaying project awards a bit. Also, what we understand is that there is a bit of funding constraint as well with a lot of developers, and consequently, some of the HAM projects that had got awarded last year, they haven't yet entered the execution period. So that is also something that is bringing down the pace of execution as well as new awards.
Okay, there are certain portions which are looking okay. For example, I think water and irrigation orders have looked okay. I think factory orders have remained reasonably okay. But I don't think these are chunky portions, right? These are, well, in their own aspect, they are large. But within the overall scheme of things, these won't be considered chunky. So even if the pace continues to remain strong, will that provide relief in terms of overall ordering?
So something like water, it used to be a fairly small segment 2-3 years back. But what we have started seeing is that a lot of state governments are placing water orders, and slowly and steadily the segment is becoming more and more meaningful. Buildings and factories, again, we had seen a very prolonged slowdown in last couple of years as private sector had stopped placing orders for premium housing projects. But now instead what we are seeing is that there are a few affordable housing projects which are getting awarded, We are seeing a few, something like BDD Chawl redevelopment project that got awarded, some government offices projects which have started getting awarded, and all these are helping certain companies. Especially a company like L&T or Larsen Toubro, which has a fairly wide and diversified presence, is a company which is benefiting a lot from such a diversity of order flows. Because when it's only NHI orders that get placed, there are 15-20 bidders which come and participate in those orders, and the share of L&T typically goes down. But when you have such diversified ordering taking place, and with L&T having a presence across most of these verticals, its market share essentially increases.
What would you factor in once we start seeing Q3 numbers coming out from within this sector?
So we expect companies to be reporting muted order flows this quarter. So for instance, for L&T, we are building in around a 9% year-on-year order flow decline in Q3, which though is still better than what the street expectations are. Just like the overall sector, L&T's order flow pace or order announcement pace has also slowed down in the last couple of months, and which could lead to this decline. But again, when you look at on a 9-month basis, order flows would still be fairly strong for L&T, given that the company had already delivered 40% growth in H1. And again, this is not really surprising, because even when you look at management's guidance or street expectations, management guidance was for a 10 to 12% order flow growth for the year as a whole. And at the beginning of the year itself, they had indicated that orders will be more skewed towards H1, which is what we are seeing. So despite the decline, our expected decline in order inflows, we don't think that the guidance would be at risk.
Okay. What about the other companies that would be within your coverage? What would you watch out for the most in terms of numbers? I mean, whether in terms of delivery of the order books, or in terms of margins, whichever may be important for you, which are the ones that you would watch out for the most?
Yes, so first, to complete the order flow point, we think even BHEL's order flows will remain weak. The company has announced only one decent sized order in third quarter, which essentially puts the asking rate in fourth quarter at a fairly high number. And should order flows get missed by a wide margin, I think revenue expectations for the next 2 years could also come under risk. Speaking about the highway companies, given that overall ordering itself has been so weak, there's a possibility that those companies would also be reporting weak order flow numbers. On other parameters that we would be watching for, one of the key aspects is domestic revenue growth or the pace of execution. Over here, we have seen an improvement in the last few quarters, especially for L&T, and we would like to see that continuing. The other aspect would be working capital, wherein some of the better managed companies have managed to keep working capital under control, and that is something that we would like to see again in third quarter.
Interesting. Just one follow-up and one final question from mine. BHEL, I was, unless I'm very wrong, I was reading a brokerage note, one of your peers, which spoke about how the delivery of the top line, bottom line numbers, and thereby even the margins would look rather strong for BHEL compared to what they've done in the preceding few quarters, maybe the last 4 or 5 or 6 quarters. I think the note was talking about some 40-50% uptake. Do you have such numbers penciled in, or are your estimates way different from the numbers that I'm talking about?
So you are speaking about third quarter?
Yeah, quarter 3.
So for quarter 3, our numbers are not that bullish. We are modeling in around 10-12% revenue growth for the company. There has been a fairly significant increase in the executable order backlog for the company. But as we saw in the preceding quarter as well, not all of that will start contributing to revenues immediately. So we think it will be only a 10-12% revenue growth. Operating leverage, therefore, will not play in a huge manner. And we are not thinking that BHEL would be reporting.
Aditya, I stand corrected. So the revenue numbers growth is anticipated to be 11% as well, but the profit numbers are expected to be higher as per a couple of your peers. I think the EBITDA numbers or the EBITDA margin numbers as a percentage of sales on a YOY basis expected to be higher, and therefore the profit growth expected to be much higher. Is it possible?
Right. Yes, that is possible because Q3 last year was a fairly weak quarter. To the company's credit, they have managed to maintain gross margins in a fairly resilient manner. And despite all the pricing pressure that we have seen in the last couple of years, their gross margins haven't really come under pressure. And in that context, with a 10 to 12% revenue growth, I think, and with overhead costs also kept under control, there is a possibility of reasonably strong margin expansion, which should be resulting in EBITDA growth being fairly strong. But that is something that is built into everyone's numbers, not only for this year, but for the next year as well. And to us, the risk appears more on the downside, especially for the next year.
Okay. Aditya, so good chatting with you today. Thanks so much, and a very interesting report, more importantly. Thanks so much for writing that as well. It was a good read today.
Thanks, Neeraj. Thanks for having me on the show.
Pleasure. Okay, that's the view from Aditya Bhartia on the state of order flows. Selectively, they are seeing good numbers, but by and large, I think a couple of other houses have also written about how by and large the numbers have started to look a bit disappointing compared to what the anticipation was. Well, it's not just for infrastructure, frankly, it's there for automakers as well, because car makers may miss their FY19 guidance with dealers grappling with high inventory. Rajan Vadera, the president of Society of Indian Automakers, attributes the higher stockpile to lackluster festive sales. However, in a chat with Bhanvi Arora, he spoke about some key factors that could drive car sales in Q4. Listen in.
Most of us had expected the last quarter to be good, consequent to the festive months. But the festive month didn't turn out to be the way it should have been. Sales have been lower in the last quarter, and consequently there was a stock-up build-up at various dealers. And in order to downstock, one has to reduce the billing in the month of December. And most of the manufacturers, OEMs, have corrected their stock levels, and hence you see billing is lower in December.
How do you see the two-wheeler segment going forward in the first quarter of 2019?
I think with the stock levels corrected, I don't see any reason for not growing in Q4 over Q3.
The passenger vehicle segment has not been doing well for this in the last 2 months, and for this month the sales is down. What are the factors that are affecting the demand?
So passenger vehicle, largely the UV and the vans and cars, has not done very well, and I would attribute it to overall sentiments which have not been very good. And if I were to put the sentiments, it's against the interest rates which went up, is not easy availability of funds, fuel prices going up. So all this has actually ganged up against the sentiment of the customer, and this segment is largely driven by sentiments, and that's why you have seen degrowth.
So are you expecting it to recover in the next quarter or going forward? What is your outlook for the PV segment?
Well, there are signals. You see the fuel prices are coming down, and I think liquidity also, I'm sure, will become better, and people will reconcile to that. Interest rates have not gone up. So I think the sentiment is improving, and therefore I would expect that Q4 will have a growth over Q3.
In the last 2 months, CV sales has also been declining. What is the CV sales, commercial vehicles? What are the reasons for it?
CV sales largely in the area of heavy commercial vehicle. If you see, heavy commercial vehicles sales growth rate has come down. And that's because of, I think, the axle loading norms have given extra capacity to the CV industry. As a result, lesser number of trucks are required to move the goods. And also, availability of funds. NBFC have been funding this sector quite a bit, and that rate has gone up, and also It's not easily available. So heavy commercial vehicle industry got affected because of these two parameters. But light commercial vehicle industry, small commercial vehicle industry has not got impacted that much. So that has shown growth.
Coming back to the PV segment, how are the inventories? There have been a lot of inventories. So are the companies tackling the inventories?
So I think in December, a lot of correction has happened. If you see our December sales figures, the retail has been much, much better than the wholesale. Consequently, the inventories have come down from an average of probably 50 days to something close to 40 and even less for most of us.
So how are the companies going to affect by it, or how are they tackling?
So this should improve for us, no? If inventories come down at the dealerships, then we get a chance to bill more, and it directly reflects as the retail and wholesale. If my retail is higher, my stocks come down, my inventories come down, and then things get back to normal.
There was concerns by the automobile industry regarding the GST rates. Will you speak to the government about it, or has there been a communication with the government?
Yes, we keep talking to the government at regular intervals, and we will be making a representation to them. As the crash and safety norms get implemented, the BS6 comes in, they're going to add substantial cost to the vehicle, and hence we are going to make a representation to the government to bring down the rates of GST.
Okay, now that's autos, and today autos have had a bit of a mixed day, to be honest. Nothing too dramatic. Some stocks like Bajaj Auto, etc. have all come off in the session today. So that stock is down about 1%. There are some which might not be doing as bad, the likes of Tata Motors, which has gained again after looking slightly wobbly in Friday's session. Tata Motors, and after starting off lower as well, just come up a little bit as Tata Motors. So it's not a bad last 15 minutes. And Maruti Suzuki too has gained a little bit in the session today, 7374. The index for itself is off the lows of the day quite considerably, just about 0.5% lower now for the Sensex as well as the Nifty Bank. So not looking all that bad. Let's get in our technical experts on board to try and figure out what are they doing in a scenario like this. We want to talk about Yes Bank as well individually, but start off with the index views. Hemen Kapadia of KRChoksey with us on the show. Hemen, and of course Sumeet Bagadia would be joining us on the show as well in moments from now. But Hemen, good afternoon. Thank you so much for joining in. How are you approaching trade today? What's the view?
Very good afternoon to you, Neeraj. Thank you for having me. We've been range bound, Neeraj. Last 7 weeks, we've seen the Nifty give a upward or a downward key reversal. Now, last week, we've remained within the previous week's range. The maximum OI is at 11,000. That's around 46 lakhs. We'll have to look at the closing. Maximum put OI is at 10,500. Friday, we saw 6 lakh writing at the 11,000 call option, Neeraj. And around 2.85 lakhs, 10,500 put was shed, or 1.85 lakhs. Thing is, we've seen more writing at the high, and we've seen reduction in the put. What it indicates is that, one, I think 11,000 now seems like a tall order for the settlement. This could change, but as of now, I think it looks like a tall order. There's maximum OI after that at 11,200. We've seen around 3 lakh writing at 10,900 on Friday. So 11,000 seems impregnable as of now. I have a feeling we could, if we break 10,700 decisively, we did that briefly, we could be heading to test 10,500, and the reduction in OI over there seems to suggest that put writers are probably strategizing for that level to come in. So honestly speaking, and the Nifty is moving in a symmetrical triangle on the daily chart. The breakdown could happen on either side. The Bank Nifty is moving in a rising wedge, which is a bearish formation. So frankly speaking, we are at a make or break level. A 300 point or a 300 plus point movement in the Nifty seems to be in the offing on either side. So I would be very careful. I would prefer to sell the 11,000 call and 10,500 put.
So can you just explain this strategy? I believe it's the short strangle. Would you do this at the current prices? And are there some stops that you put into place for a strategy like this?
Well, yeah, I mean, current was slightly, higher. It's not going to make that much of a difference. But yeah, ideally the call at 11,000 call at 45, the 10,500 put at 62, you get a premium of around 107. I would have a stop loss of 130 with a target of 55.
Okay. Okay, 107 is the premium that you get at the prices that Hemen is talking about. A stop is at 130 and the target is 55. If that's complex, let's try and figure out if there's a simpler strategy. Sumeet Bagadia might have one. He's from Choice Broking, joins us right now on the show. Sumeet, good afternoon. What are you doing on the index currently, either the Nifty or the Nifty Bank?
Hi, good afternoon. Nifty has given a good correction from higher levels today, but now it seems that it has taken support, and from low levels we are seeing some pullback or bounce back. We feel that from here on, Nifty can give a good move in which we can see a move till 10,800 or 10,850 levels. I think any dip from present levels till 10,700 or 10,680 or 690 levels should be used as buying opportunity. Downside, Nifty has supported around 10,650 levels, so that should be the stop loss for long positions, and on higher side 10,800 and 10,850 can be the targets for Nifty. At the same time, same is the case with Bank Nifty. Bank Nifty is also given a correction from higher levels, but now it seems that from here on we can see a bounce back or pullback move. So for a trading perspective, one can initiate long positions in Bank Nifty with a stop loss to be placed at 27,100 levels on lower side for the upside target of 27,500 and 27,600 levels in next couple of days.
Okay. Interesting. So do watch out. It's the second buy in the day today on the Nifty Bank. The morning's levels, the morning show at about this 27,300 odd levels, there was a buy call given on the Nifty Bank. Currently, Sumeet Bagadia comfortable giving a buy call as well. Do watch out. Specific pockets of strength and weakness, the specific stocks. Hemen, I'll start off with your stock-specific recommendations first.
Couple of stocks which are looking good. Firstly, Yes Bank, Neeraj, we've been oversold. We've seen a base formation come in. Indicators are positive. So buying Yes Bank at around 195, stop loss 191, target 203. Second positional buy would be on MCX, Neeraj. We formed a rounding bottom on the daily chart. Not exactly, but sort of. We posted a fresh high. We're breaking out of a 8-week range. Indicators have turned positive on the the weekly as well as the monthly. So buy on MCX, Neeraj, at 758, stop loss 752, target 770.
Sumeet, what about you? Your stock ideas?
Well, I have two stocks for the day, and both are on buy side. The first one is Kapadia Healthcare. Kapadia Healthcare is looking good to me. The stock has given a good move from lower levels, and from here on, Kapadia Healthcare can move up till 365 or 370 levels. One can initiate long positions at the current market price. If there is a dip of around 2 to 3 points from present levels, then that should be used as a buying opportunity. Stop loss can be placed at around 345 levels on lower side for the upside target of 365 and then 370 levels in next couple of days. The second stock for the day is from cement space, and that is Ambuja Cement. Today we have seen some buying move or some recovery from lower levels in Ambuja Cement. It seems that from here on the stock is headed higher, and on higher side we can see levels of around 225 and then 230 in next couple of days. So for a trading perspective, one can initiate long positions in Ambuja Cement at the current market price with the stop loss to be placed at 205 levels on lower side for the upside target of 225 and 230 levels.
Some buzzing stocks. I want to mark the volumes out here as well. So firstly, Jet Airways is up and about 277 and counting, 9.5% higher in trade today's Jet Airways. So watch out for this stock. It's doing remarkably well. And the volumes to the AV80 function, if you can just show the AV80 chart, that's the volume, current volumes versus what the 20-day average volumes are, and you will see that those two, despite the fact that Jet Airways usually trades at much higher volumes, those two would be higher than what the average volumes are. Look at that. The white line is today's volumes. The blue line is the average volumes. The blue line is anyways higher, crept higher, because the trading activity in Jet Airways the last few days is anyways high, but the volumes certainly have picked up steam. So this is one stock that's doing remarkably well for itself. Stride Sashan is trading at the highest point of the day. Good going there. And a couple of mid caps like Vakrangi and Praj. I don't want to steal Sharad Dubey's thunder, but just want to mark these names. And before I go to Sharad Dubey, Hemen, I just want to come to you on Jet Airways because that's just doing fabulously well for its shareholders.
I am assuming it's short covering. It's been in the ban list for the last whole week, Neeraj. So I would simply say that it's short covering. But yes, I think the cash market volume you mentioned, Neeraj, has spiked up tremendously. 2 crores is the highest volume in the last 25 or 30 trading sessions. Resistance at 285, high beta stock, but I think it looks like appreciating further. But we are going to run into a mini roadblock at 85.
85. I thought as much because that was 280, 285 were the levels at which that story, the news piece broke out about the downgrade coming in on Jet Airways. And from there, those levels went down all the way to 245 or 40 or thereabouts. But currently bouncing back, does hit an air pocket at about 80, 85, potential air pocket. So keep that at the back of your mind. However, while Jet Airways is doing well, there are a bunch of other stocks which are doing well, and there are some which are not doing well. So first, let's get in Sharad Dubey very quickly to talk about the stocks that are buzzing in trade today. Sharad.
Yes, Neeraj. The first stock I've picked up is Federal Bank, which is down by almost 4%, its lowest level seen since a month. This is based on the news that Ganesh Sankaran, the executive director, has stepped down from the board of directors with effect from January 15. The company says that he will take other opportunities in the financial services sector. The second stock I picked up is Cadila Healthcare, which is up by almost 1.5%, its highest in past 2 trading sessions after Zydus had received final approvals from the US FDA for betamethasone, dipropionate cream and amlopidine tablets. So basically the cream is used to treat a variety of skin conditions, while the tablets are used to treat blood pressure and cholesterol. The third stock I picked up is Jammu and Kashmir Bank, which is up by almost 3%, its highest level seen in a month. Basically, the bank had reported an operational earnings which were marginally above the estimates, with a strong net interest income growth coming up at 13% at around rupees 882 crores versus rupees 780 crores. But aging of stressed assets and ILFS exposure has kept the provisions elevated to around 263 odd crore rupees. So these 3 other stocks, Neeraj, back to you.
Thanks a lot for that. So some active names. I think the one that has been the most active though is Avenue Supermarts. It's now trading at the lowest point of the day, 9.5%, and I think 2.5 million shares would arguably be the highest that I've seen in a really, really long time for Avenue Supermarts. Let's get in Darshan Mehta, our head of research, to come and talk about what's ailing the counter and what have dealers or analysts told him about their views post this fall as well. Darshan.
So I think if you look at the numbers, the biggest fall that the company has ever since it has listed. So that's the big concern that is there. Obviously, the financials were much weaker on all avenues, be it the top line, bottom line, or be it the margin. So extremely weak set of numbers, and this shows that there is a clear indication of slowdown. Even the profit was just up 2%. If you take a look at the revenue trend, it's the lowest since a while. So there is, and it's not the first quarter; it's the second quarter in a row that Avenue Supermarts has missed the estimates, and that's why it's down in trade. Basically, the revenue growth was decent, the store addition was decent, the pricing strategy that they had was falling into place, but below the line items are a big impact, because if you're looking at it, they did price cut during the festive season, they overspent on longer operating hours, the inventory was much higher, they spent much more investments on infra and people, and all of them actually coming down and weighing in on the margins of the company. At 200 basis point drop that came in. Valuations are extremely high, and at such valuations you cannot afford to have any kind of risk. What are brokerages saying? Most of the brokerages have cut the EPS estimates anywhere between 9 to 10%. Credit Suisse says it's the second straight quarter of more than a 10% earnings miss, and they are underweight on the counter. Edelweiss is saying that the store addition pace is significantly lower than what the management had guided earlier. JPM is saying that its expensive valuations and earnings downgrade are keeping it underweight on the counter. So, and I think if you're looking at the analyst recommendation, the number of sell recommendations on Avenues now is much higher than what the buy recommendations are. So overall, at such valuations, lofty valuations, you can't afford to make such mistakes.
Well, certainly looking wobbly. Thanks a lot for that, Darshan. Sanjiv Bhasin of IIFL is joining us on the show. Sanjiv, good having you as always. Thanks much for joining in. And you would have half anticipated that the first question of the day, well, it could have been on a Yes Bank too, but I'm starting off with Avenue Supermarts because we're just discussing that. What was the call taken on the morning meeting today, Sanjiv, and what's your gut feeling? Until now, at every single point of time when Avenue Supermarts has fallen, the lower float, the lower liquidity all comes to the aid. And of course, the fact that the business is fantastic, run by a credible management team. Could this time around be different?
Well, I think they had already guided that there's a change in strategy and they want to gain market share. For that, they will be sufficing some of the margins. But like I said, this stock was defying all gravity when it went to new highs. on the back that we are a very strong, retail-oriented market, and that will see footfalls. You saw the likes of Walmart put in 1 lakh crore for Flipkart, and now at a time when there is weak sentiment and you have enough other opportunities, why would you want to just chase this stock? So I think markets are going to give it a couple of quarters till it stabilizes, it sees or it guides forward, and then they'll take it from there. But yes, like you said, each fall of this stock has been a buying opportunity. I still think if you have a slightly longer term window, then maybe after the elections this stock could actually get back to some of its mojo. But right now, at a time when sentiment is slow and you have another offerings of a lot of other stocks which are giving you bargains, I think this will remain under pressure.
If you, Sanjiv, the question that I would probably have more is that a lot of people who got this stock in the IPOs would have still, or some of them would have still been holding until yesterday as well. The gap down didn't give them a chance to get out at a favorable price. At this point of time, would you believe that it might be prudent, even if it's 10% lower, to switch out of an Avenue Supermarts, which might remain under pressure for some time, into something that has already faced some pressure and is trading at lows? Some other sector, some other stock.
So Neeraj, if you were one of the few who bought this on the IPO, you made a lot of money, and it was prudent to have booked a lot of profits when you got the chance. Now at a time when the stock is definitely last quarter also been under pressure, the writing was on the wall that you've had the best of same-store stays and so on and so forth. So I think that right now if you are holding it, it's a quality stock. It has a very, very pedigree management, and going forward, it will be back to run of the mill. But for the time being, like I said, it doesn't make sense to sell a stock 10% lower. By the way, we are not so bearish on the market. Don't take these 2 days falls as being a selling opportunity. We think these are buying opportunities. We think second half of January or the end will be much better. Globally, we know what's happening. China data is weak and there is talk of a US recession. We think this is the year for emerging markets, and we think the dollar will weaken. Hence, we think that equities are going to outperform. So you buy our basket of stocks where you are comfortable. D-Mart for the time being would be a hold.
Okay. The other is this whole conversation around and the whole suspense around Yes Bank and who the potential successor could be, and what does that do to the investors' wealth. Today the stock is rejoicing. A couple of names have been floated around. What do you think, Sanjiv? Because I remember when this news first came about, maybe 3 months ago, 4 months ago, there's a lot of debate about whether an internal candidate might be a better one for the existing shareholders, because kitchen sinking could not happen at a very rapid pace, versus now the belief being that a marquee name coming in might be better from a long-term perspective. Where are you on this argument? Where are you on the stock price for Yes Bank?
So look, Yes Bank has become a very, very active traded stock, and it's, all the fear has come from 400 to 150. 170 to 200 is the range. Whichever side it may break out, you may get the further move. Till then, it remains a trading stock. When you get bad news, it comes to 170, and on good news, it comes back to that 200 level. We want this whole suspense theory to be played out even faster. And once you get a resolution, I would be very happy if Mr. Rajat Monga was one of the names an internal candidate is suggested, since he's been with the companies, with the bank since inception, and he'll be very privy to whatever the road forward would be much easier. Right now, the murkiness has made people get more, circumspect, and that's what's causing this volatility. Now, on bad days, the stock moves up. On good days, the stock moves down. So it's not a trader's delight anyway, and most people on the wrong side of the market are always getting hurt. Like I said, we need more clarity. Once that comes in, we would be happier with a name which is, from internally in the bank itself.
The other conversation, Sanjiv, is on large cap IT. I'm not even going down mid cap IT route, but save for Infosys, everything under pressure. Is the market of the belief that the margin pressures that the two big boys have faced would be the kind of pressures that the others would have to face as well, and therefore maybe the quarter will be weak, so get out of the stocks, because that's what's happening today. Wipro is down, Tech Mahindra is down, HCL Tech is down, save for TCS is down, save for Infosys, everything is down.
Yeah, so even though the numbers were definitely weak on the margin front, the guidance was fairly positive, and the buyback is another lure for the retail investor. Now that's in stark contrast to what you are hearing from Apple and Samsung, which globally have seen techs take a beating. We hope that outsourcing remains a strong theme, and that's what the managements have indicated. But I think this year is not going to be a tech-led rally. This is going to be a year of corporate banks, of consumption, of construction, of real estate. So there is a whole host of other beta which are going to outperform. We would advise any rally to be used as an exit. If you want to play the rupee weakness, then I think pharma may give you a much better delta. So we would rather buy a Dr. Reddy or a Sun or a Lupin or an Aurobindo to play the rupee. For us, IT would be a reduce on rallies.
Any thoughts on Everready, Sanjiv? After some time, there is some activity here the last couple of days on the news about BM Khaitan putting the company on the block. How positive, negative, neutral is it for the non-promoter shareholders?
Well, it should be a positive. I think the brand is very, very strong, and you've seen traction on the consumer electrical very, very strong. So I think it should be a welcome news, and we want some of the old promoters, if they do come up with this. You saw that in the case of some of the other people who were ready to, in the case of Z also, where the promoters were very, very quick to realize that the geo threat is for real, and they are ready to part with sell some of the stake. I think in the longer run it should be for investor creative.
Okay. Of course, what else is doing well is Jet Airways. We've spoken at length about it now, 278 and counting. Stride Sashun has gained about 8%. We spoke about Everready, yes. There is strength in mid-cap real estate today. Actually, every real estate stock is a mid-cap per se. But HDIL, se leke, you have stocks like Godrej Properties, which are doing rather well for themselves too. So that whole gamut of stocks seems to be doing rather well for themselves. Any thoughts here, Sanjiv? And if you were to advocate investment in real estate, Godrej Properties might be the obvious choice, but it's run up quite a bit. Would you maybe therefore prefer an Oberoi, which hasn't had so much of a gain, or maybe a Colte, or is it something else, if at all?
So three names which I would suggest. One would be obviously Godrej as a top priority. I also like Shobha and Prestige, more specific to the Bangalore real estate market, and the management has sounded on both those counts very, very positive. They are expecting that the RERA regulations will play a catch up, and I think these two could be real bargains going into 2019 second half.
Look at the moves that we're seeing in Godrej Properties. Just before we thank in Sanjiv, Bhasin, want to take a chart check on Godrej Properties with Sumeet Bagadia. Sumeet, the stock on a roll, yet another day of gains for this one. How much more upside in the current uptrend do you foresee?
In the last 7 to 8 days, we have seen a rally of around almost 100 rupees from low levels. And still it seems this stock can move. It seems that this stock can give good move from present levels. At the levels of 740, 744, it's a good buy. A closing above 750 will take stock prices to 800 or 810 levels in the next couple of weeks. Those who have taken long positions in Godrej Properties, they can hold on the existing long positions. One can go ahead and initiate fresh long positions at the current market price. Downside, it has support at around 710, 715 levels. So that should be the stop loss for long positions. And a closing over 750 will take stock prices to 800 or 810 levels in the next couple of weeks. So one can go ahead and initiate long positions at the current market price.
Okay. Sanjiv, Bhasin, before we thank you, a word on Jet Airways. And if you would even touch that stock, or would you look at some other aviation stock, or not look at aviation at all?
No, we'd stay away. You can see what the imbroglio is. Once Naresh Goyal relinquishes his position, either Jet or Aviad will buy it. But why do you want to risk a sector or a stock which is underperformed? you know, try and get into some better sectors, like you said, real estate, try and buy an NBCC, a Nagarjuna Construction, a Cummins India, a Siemens, an LLT. These are going to make a lot of money. IDFC Bank would be my preferred choice and the dark horse of 2019. I think that stock can give you a 60% upside for targets of 75.
But Sanjiv, if indeed I mean, there are two options, right, for a jet, that either Naresh Goyal stays in the driver's seat or he bites the bullet and somebody else and he loses control. So if the scenario were to turn out that Naresh Goyal were to lose control of Jet Airways, whether it's via the Etihad route or whether it's some other company which comes in and Naresh Goyal is not at the helm, do you reckon that it could turn out to be a positive for Jet Airways so much that people would go out and buy the stock at 300 odd rupees? It's currently at about 283 now.
Like I said, Neeraj, that is all in the realm of what can be. Like I said, the real proof of the pudding is if you have some other good stocks where you can make money. Why play on a suspense theory which you don't have privy to? A 650, 700 stock hit 250. Where were people? So it's very difficult. This is all insider now who are in the realm of what the new status is going to be. I am not privy to that, so I cannot comment. For me, Jet will be an avoid.
Sanjiv, we'll leave it at that. Thanks so much for joining in today and giving us that thought and those thoughts and your perspectives on the markets at large. Well, Sanjiv Bhasin of IIFL with his thoughts. Take a break, really, as we hit that break. Here out from Inox Leisure, they expect 2019 to be a blockbuster year for the multiplex chain. In a conversation with us earlier, the CEO Alok Tandon says he's betting on innovation, expansion and box office success to enhance the 3 revenue streams. Listen in.
I would say that occupancy is a function of the content. And looking at last year where the content was good, and this year whatever the pipeline of the movies is, we feel that the content should be really, really good. So 2019-20 should be a very exciting year for the entire movie industry. They are big budget movies, they are small budget movies, they are movies which I've come to know have got some great stories in it, and the way they've been shot, directed, so all that will add to the entire pulling out people or decouching them from their homes and coming to watch a movie in a cinema hall.
You don't consider the digital movement as a threat, right?
Well, remember one thing, that there's always a time lag between the movie hits a screen and it comes on a digital platform. And all the true connoisseurs of a movie have already seen it in a hall. Number 2, the content which we see today in a digital platform is different than that what is shown on a screen. Today there are web series made only for particular platforms. It's a different type of content which is consumed on alternate platform. Yes, there are movies also, but that's after they have lived their life on a giant screen.
Right. Let's talk about Inox in particular, and what are the plans for growth, not just in terms of expanding the number of screens, but to focus on improvement of realizations per screen.
Well, let me tell you, as of today when we speak, we have got 546 screens in 67 cities. And as I always say that we have been on a growing phase since we opened our very first screen in 2002. Going forward, we've got a slate of about 850 screens which are already signed. And these are backed by signed agreements which we have.
Okay.
Going forward, we are looking at various formats. We are looking at the insignia properties where we are standing in as of now. We are looking at a club class. We are looking at a kids. We were the first in Mumbai to open one theatre which is only for kids and where the kids movie run for all the shows, all 7 days a week. Hence, we are experimenting with various formats, and what we have seen that it's done well over a period of time.
Okay.
Even where our focus, yeah.
I want to stop you there. So while these formats are definitely for the experience,
right,
you know, they necessarily are not the big revenue garner for you, because your screen size is smaller,
right,
your experience is that much more premium, so you have only that limited class of people that you can target. So how would you balance out the two between catering to this niche as well as getting your mass audience on?
Well, I would say that most of our screens are normal screens which you have with an ample leg space, comfortable seats, and these are regular screens which we call. But a part of it, part of the 546 screens are also these special format screens. You talked about how do we get in more revenues, how we get more realization. Well, if you know that there are 3 types of revenue streams in a cinema hall. One is the box office, F&B, and third is advertising. And our focus is on every single one of them. How to increase our occupancy, how to increase our conversions, how to have more people buying food, what type of food can we sell, what is the variety, and similarly for advertising, how do we go and meet a media planner, how do we tell them that yes, we can advertise your product on the screen as well as in the lobby which we have, so that a patron can feel, touch or see the product which he saw on the screen. So we are focusing on all these 3 verticals of a revenue stream. And if you see our results quarter on quarter have improved, whether it's the footfalls, whether it is the advertising revenue per screen, or the F&B spend per head.
Delegates of over 100 countries, 15 partner countries, 10 partner business organizations are uniting on a global stage. They will also witness the India's biggest trade show, new opportunities for trade between Gujarat and Africa, Ahmedabad Shopping Festival, MSME Seminar, futuristic technology exhibition. Watch the unfolding of Gujarat's future in Sprint 2022 and experience much more. Welcome to the 9th Vibrant Gujarat Global Summit, 18th to 20th January, Gandhinagar.
Navayuga Engineering Company, a global infrastructure giant, has created history at the iconic Polavaram irrigation project in Andhra Pradesh. A remarkable achievement and a testament to the engineering prowess which has made them set 2 new Guinness World Records title for the most concrete continuously poured in 24 hours. Navayuga also broke the existing record for the largest continuous concrete pour.
We reached 4,000, 5,000, 7,000 was India record, then we 11,000, then we 16,000, then we checked everywhere. Then we found we are well within the reach of world records. Then when we talked to them, they were quite excited, and then they showed us that there are 2 records to be broken. The good thing is both the records are broken today.
The Navayuga Engineering Company, building the future while setting new records in global engineering.
Back with countdown right here on Bloomberg Quint. 27.5 minutes left for the markets to shut shop. Just pull up what the European scene is looking like right now. The European markets will come up on your screen, and we'll just pull up the turnover for the day as well. 0.5% lower for each of the European indices. The turnover should come up on your screen. It's the first day of the week. The F&O turnover and the cash market volumes both looking slightly soft. Cash market in particular looking very, very soft right now. So it's a low participation day today. However, within this, even though the Nifty Bank may be down 0.75%, there are a bunch of stocks that are flying around. Let's find out what's made it to Yash Upadia's list of the Fab 4 stocks of the day. Yash, good afternoon.
Afternoon, Neeraj. I'll start with Infosys, and I believe that one's up about 2%. They came out with an inline set of number, but the key trigger has to be the hike in the FY19 revenue guidance to from 6 to 8% to 8.5 to 9%, as well as the share buyback that they announced at 800 rupees per share, which is at a premium of more than 15% from the current price, so 2.5% up there. GNA Axles has come off quite a bit from its highest point of the day. It had surged more than 4% after reporting a good set of numbers actually. Revenues are up 40%, profits are up also more than 40%. However, margins, they have come off a bit, about 30 basis points, but all in all, extremely good set of numbers. BL Kashyap is a small cap name, has a market cap of almost about 480 crore rupees, but the key trigger behind today's 10% move is the series of orders that the company has won, amounting to more than 650 crore rupees. So watch out for that. And the last stock to watch out for is Castrol India. That one's moving on the back of high open interest build-up of more than 14%. The stock is up 3.5%. Back to you.
Okay, thanks a lot for that. At the onset of the fourth quarter this fiscal, let's take a look at how has the infrastructure space performed with regards to the order inflows. Nikki Mirchandani has pulled up some analysis for us in our Chart of the Day segment. Nikki.
Hi Neeraj. Well, the order inflows in infra space has actually fallen to the most that we've seen at least in 5 quarters now, mainly on account of the weak activity or the weak awarding activity coming in from the power, state highways, along with the building division. And we, however, have seen some kind of uptick coming in the hydrocarbon segment, but overall the awarding activity remains pretty much weak at that 74,000 kind of a level for Q3 FY19 as per the Investec report, which compares to the level that we've seen back in Q2 FY18. Now, this also comes at a time when the new order projects announcement during the quarter ended December has been the lowest that we've seen over the tenure for the Narendra Modi-led government. Apart from that, we spoke to Vinayak Chatterjee, the feedback chairman, and he said that a large number of projects have already been announced out in the public infra space, and now execution remains the key. According to the Bloomberg calculation, a story that we did a while back, the construction space of infra overall has been buoyant enough from April to December quarter ended. April to December period, we have seen the construction pace being the highest that we've seen at least in 4 years now.
Thanks a lot for that, Nikki. We will watch out as we speak. By the way, Jet Airways is on a roll. It's up 16%, 295 on the spot price and counting. It's just gone berserk. It's Hemen is just kind of whizzed through the air pocket and emerged on the other side unscathed. What does one do now?
I just hope it's not preparing for a crash landing, but Neera, the volumes seem to suggest that there is something out of the ordinary. Volumes, cash market have gone to past 3 crores on the NSE. They're the highest volume since 20th November. So obviously something's happening. I guess the air pocket now would stand as a support, Neeraj, and which was unlikely. We are probably heading towards 320.
Okay. Interesting that the stock is doing what it is doing. I'm told Dharmesh Kant is with us. Let's get him in on the show. But Dharmesh, you may or may not have coverage here, but I'm just wondering, would the media reports are that Naresh Goyal may give up or may have to give up strategic control. If that were to happen, and this is not Bloomberg Quint story, by the way, I'm just reporting what's being reported across a couple of other media houses. But if this were to happen, is that so important to the market that the market will reward this ailing airline with a 15-16% up move and maybe more?
Yeah, good afternoon, Neeraj. I don't know about that, whether this is rewarding or not, but I do know for the fact it will be very difficult for Jet Airways to come out of the corner in which they have been settled up now. And anyways, I don't think Mr. Goyal has any choice left for him, because and this speaks volumes about about the management pedigree and the type of concerns people have around you. I mean, your investors who have invested in the company, why they want your voting rights and shareholding to come down. So it's very difficult to say whether this airline will come back from the corner. And going by the way things are happening and the news flow surrounding on the operational part, I was just going through one of the articles which said 18 planes were held up at an international airport because the dues were not being paid, and this has a cascading impact. And crude, if it flares up, currency again flares up, it will again be a loss-making entity. So just wiping out the debt won't suffice the issue, and it's a good amount of debt. Operational concerns are also there. For trading bounce back, we are seeing it may go to 320, 360 as Hemen was suggesting. So, but for me, it's just a trading play, nothing beyond that.
Okay. So that's of course Jet Airways. The other one of course is Strides Sashun, which has actually had a really good move in the session today. 8% higher, 519. Sumeet, Bagadia, you want to come in on a Strides Sashun? Don't normally, or off late, haven't seen the stock do as much. In today's session is up and active.
Yes, you are absolutely right. In today's session, the stock has given a very good move, and it has been consistently trading over 200 DMA also. Today the stock has given almost move of around 40 rupees from low levels. It has also broken the recent highs. It seems that the stock is headed higher, and from here on we can see a move till 560 or 580 levels. So for a trading perspective, those who have taken long positions, they can hold on the existing long positions. And in fact, one can go ahead and initiate fresh long positions at the current market price, with a stop loss to be placed at 499 levels on lower side for the upside target of 550, 560 levels.
Okay. Strides Sashun is active, Yes Bank is active, Jet Airways is active, Ever Ready is doing the same as well. And then a clutch of other names, some mid-sized banks, J&K Bank after results, Karnataka Bank has done rather well for itself, so good going there. A couple of other financial NBFCs have done rather well for itself. Bajaj Finance, by the way, after taking a bit of a stick the last 2 or 3 sessions, is also bouncing back, so really good going. What is not doing well? Let's talk about stocks which are not doing well too, because there's a fairly wide list on the Nifty itself. A large cap IT has been taken out today, save for Infosys, almost everything else has gone down. Dharmesh, Kant, anything within the large cap IT basket that if you had in your portfolio, you would get out of?
Yeah, I think both the results to my mind was normal kind of earnings, whether it was TCS and Infosys, missed it by a wide mark. And see, the problem about Infosys is consistency in their guidance. So they have been so erratic during last 1 year or so. Every time they need to change the guidance, and this was not the case with Infosys. I understand, all management appeals which are happening, their business trajectory not getting in place, and they are losing on the margin. So this was their forte. They used to price their products, at a higher premium, and now they are compromising on that to get the business, which is reflected in the numbers. They have upped their guidance, but again, I will have it with my own, fingers crossed, because next quarter they may come and again say it's 6 to 8% kind of a growth they are looking forward to. So this doesn't augur well in the long term. As far as buyback is concerned, they have no choice, and it's a better option because what you are getting in treasury is 6-7% kind of a margin. So whereas if you buy back, it increases your ROE. So mathematically and for the investors, it does leave a choice. So the people who want to play this buyback, for them good 4-5% can be made on an yield basis. So that is definitely there. Apart from that, I don't think there is any meaningful, tailwind as far as businesses are concerned, be it BFSI or, retail, insurance. Nothing has looked promising to me, both TCS and Infosys. So I would wait for SCL Tech numbers to, again, I was a seller in all the IT stocks, large caps, mid caps, all put together. And if SCL Tech doesn't promise anything, so it will again be a sell to me. Though the currency has again started depreciating, but that's given out there. It's not going to make any meaningful tailwind from the business perspective.
A stock that's perking up the last few minutes of trade is Gayatri Projects. It's moved from the red into the green, but the large portion of the gain coming in the last few minutes of trade. Jet Airways, of course, continues to rise and shine. 296 now on the spot. But yeah, Gayatri Projects has done rather well. Mindtree's gained a little bit in the session today, and Coffee Day has gained a little bit, 275, up about 4% now as we speak. So 3 or 4 names which are doing rather well for themselves right now. So do keep an eye out for each of these. A couple of chart checks. We haven't taken a call on large cap IT on the charts. Hemen, Wipro and a Tech, what do the levels suggest?
Wipro remains a perennial underperformer, Neeraj, and I think 339 has been a multi-year resistance. I don't think we've ever been able to sustain above 340, sorry. Yeah, 339, 340 from a closing point of view. The short-term picture has turned a bit negative. I think it looks more like a distribution pattern, Neeraj. So support comes in at 305, but nothing much to note. And Tech Mahindra has also been range bound with a mild negative bias. So frankly speaking, nothing much to go on, but they are looking top heavy.
Okay. Stay on with us, gentlemen. It's time now to take a look at what dealing rooms are recommending this afternoon. Both Yatin Mota and Darshan Mehta are here with their channel checks. Start off with you, Darshan. What are your dealing room channel checks suggesting this afternoon?
Yeah, I think pharma as a theme is finding flavor. Two of the stocks are in the pharma space. First of all, Cadila Healthcare is up 1.3%. Decent volumes today. There's a buzz of a potential corporate announcement that could come in. That's something that dealing rooms have been speaking about. No clarity of what this could be, but that's the news. The other one is GHCL, which has been doing well for itself. It's up another 3% in trade. Some of the HNIs are actively accumulating the counter, so watch out for GHCL. And finally, the last one again from the pharma space. Some of the domestic funds are actively accumulating Biocon. So pharma as a theme is something that is being spoken about, but Yatin has a few more.
Well, Karnataka Bank, that stock remains under focus. Last week they came out with earnings, and today we have a lot of domestic funds which are said to be buyers here, and the stock is fairly active in the future and option segment as well. United Spirits is another stock which is active on decent volumes, almost 8 lakh shares traded. And dealers do indicate that at current levels there is a lot of short covering which is happening in the marketplace. And finally, in the cash segment, last week also we flagged this off. Aarti Drugs is something wherein dealers are expecting a 10 to 15% upside, 3% upward. That one on decent volumes. Of course, it's a thinly traded counter, but still, given the fact that it's not a liquid name, today the volumes have been on the higher side at nearly 1.27 lakh shares.
Well, the Aarti twins seem to be doing rather well for themselves. They seem to be striking all the right notes. Yatin, thanks for bringing that set of names, as also Darshan. Aarti Industries, Dharmesh, Kant, I'm guessing you track specialty chemicals. I know you're talking about Aarti Drugs right now, but that Aarti Industries name at fresh highs. Selectively, some other specialty chemical names haven't done too badly. What's the view on this space? And if you track Aarti or an SRF individually, then those.
See, this space is looking pretty exciting. All the specialty chemical space is doing fairly well. And I won't be able to comment on the names because there are 3-4 names we are working on, and we will be coming out with initiating coverage on all, in fact, all 3 or 4 of them. So just for SEBI guidelines sake, so till the time we are out with the report, I would like to hold on the name. But having said that, this entire space, I think, is a good consumption theme which is playing out in India, and the traction will be there because China has still not started the production, and it's unlikely that they will do so going forward in any foreseeable future. So all those business migration which is happening to India will continue to happen, and in India the production is according to environmental norms, so there any stoppage is unlikely. As a basket, I would recommend to buy them until the time, maybe on our next interaction, I would be able to share a few names with them with their rationales and the target prices in place on the fundamental basis.
Okay, understandable, but these stocks are certainly doing well. As we speak, Wipro is down about 5.5%. So, boy, some of the IT majors have taken, I would presume, these margin performances on the chin, and certainly showing in the way the stocks are duly reacting. Dharmesh, you want to come in on Larsen and Toubro? That's the other one. Axis and L&T hit hard by the Sooty news.
Yeah, but I think this is a buying opportunity because the supply may be there, but we are expecting a very good robust set of numbers when L&T comes out with their earnings for Q3, and 115 to 120 basis point improvement in the margins are also what we are expecting. Order book has been very good, and around 10-15% kind of a return is very likely in, say, next 4 to 6 months, because Q4 would also be very much in line with a good traction in the business. So we are very bullish on L&T.
Okay, bullish on L&T, but for today, at least today, the stock doesn't look like really making any dramatic moves. What is making, it's down about 2.5%. What is making a dramatic move downwards though is Avenue Supermarts, 13.95. This would probably be the biggest fall that I've seen Avenue Supermarts make. It was weak and it's looked only weaker. And at 3.5 million shares, I would reckon this is not retail investors getting out alone. Very interesting to see the delivery statistics on this one today. But Avenue Supermarts had been taken to the cleaners today. Any thoughts here, Dharmesh?
Yeah, definitely. See, with the law of averages, and there's always an inflection point where the supernormal growth becomes a normal growth. I mean, it has to come down to the normal growth, and that is what is happening up with Avenue Supermarts. The base effect is now catching up. In spite of a good top line growth, they were unable to bring it down to the bottom line growth, and there was a margin squeeze. See, this management contention that festive seasonal sales and everything is fine, but at the same time, what you do when you go beyond the festive season, it has to decline further. So my own sense is for a couple of quarters, it will be rationalization of the growth for the base, and going forward, maybe in FY20 and 21, you can't expect more than 18-20% kind of top line growth, because the base will be high and all these expenses will catch up. So the PE de-rating rather than re-rating is bound to happen. So maybe 900, 850 should be the fair price of Avenue Supermarts based on FY21 earnings estimates. So a long way to go down from here. In between, you may have trading hiccups, but that should be used to lighten up your investment position in Avenue Supermarts. That is my take on that.
Okay, we'll take in what Dharmesh believes people should do on a day like this. Where is it that people can invest their money in? But for now, first get in the trading ideas from our experts. Sumeet, Bagadia, to you first, your top closing strategy.
Well, most of the pharma stocks are looking good to me. I think from here on, there is a possibility that Oro Pharma can give a good move. So one can initiate long positions in Oro Pharma at 768, 769 levels, which is the current market price. And from here on, if the stock is able to give closing above 780 levels in next 1 or 2 days, then we can see a move till 800 or 820 levels. Those who have taken long positions, they can hold on the existing long positions. One can initiate fresh long positions at the current market price. Or if there is a dip of around 8 to 10 points from present levels, then that should be used as a buying opportunity. Stop loss can be placed between somewhere around 745 or 750 levels for the upside target of 810 and 820 levels.
Hemen, what about you?
BTST on Divi's Labs.
Okay, what's the rationale?
Crossover buys on the half an hour and 45-minute charts. Breakout on the hourly charts from a 12-hour consolidation phase, and plus the stock is in a short and medium term uptrend. Yeah.
Okay. So those are a couple of names. Are you, Divi's, of course, keep in mind, has this whole API story gunning for it. A bunch of other names, the likes of Heikel, Solar Active, etc., are all up and about. So Divi's is up 2.5%. Is Heikel gaining in the session today? Should come up on your screen. Heikel, yes, about 2.73%. Solara Active should also come up on your screen. And that stock is up about 8.5%, 9% in the session today. Again, in this API space, this whole clutch of names do really well for themselves, are doing really well for themselves of late. Dharmesh, any thoughts here on this API players and the opportunities that they currently have and the benefits that could come into some of these?
See, as far as API players are concerned, their margins are, very limited, and, currency can always play a spoil sport on all of them. But given the context in which the market is now, with a range-bound kind of an activity where, any bad news is immediately being sold into, and even if there are good news, they are not rewarded, there's not a drift in the reward which we usually see. So that's a limiting factor out there. So to my mind, in the present scenario for next 4 or 5 months, if one has to invest, pharmaceutical as a space looks very attractive to me. The reasons are very simple. The downward pricing pressure which was there in the US is now stabilizing. The channel cartelization thing has been more or less stabilized. And the third is the US FDA policies or the regulations which were there. That has also taken a formal shape as of now. So 2019 would be a year when the base is being built for all these pharma companies. The prices are actually very down. Don't look at them from the PE multiple point of view, because the earnings are low. So the PE multiple still looks expensive, 20, 21 or 25 kind of a PE multiple you may be seeing. But my own sense is that earnings will take a growth from here going into year 2020 and 2021. Those 2 years will be very much EPS attractive for all the pharma companies. So this is a time to get invested into it. And the top picks out there would be Aurobindo Pharma, Cadila, and JV Chemical and Pharma. So these are the three names where we find huge value lying out there, which is likely to be unfolded in the future. So pharma is a space one should be looking at it, but selectively. And the top picks again, Aurobindo Pharma, JV Chemical, and Cadila should be there in the portfolio. So one has to be patient. Downside is limited. Upside can be 40-50% kind of an upside if one holds for 2 years.
Okay. We'll leave it at that. Dharmesh, thanks so much for joining in today and giving us that perspective. Appreciate you joining in and giving us your perspective. Thanks for that. Okay. Final thoughts from our experts. Sumeet, Bagadia, anything else that stands out?
See, Yes Bank is also looking good to me. Yes Bank today, it has given a good move. Stock is almost up by 6-7%, and from here on, if a resistance level of 200 is taken away, then we can see a one-way move till 230-250 levels in next couple of weeks. Those who have taken long positions in Yes Bank, they can hold on the existing long positions. One can go ahead and initiate fresh long positions with the stop loss to be placed at 185 or 187 levels on lower side, and a closing above 200 will take stock prices to 225 to 30 levels immediately, and then overall we are expecting the stock to move up till 250 levels.
Okay. Hemen, anything else that stands out for you?
I think Reliance is bouncing back well, so the market should improve tomorrow simply because of market weightage.
So Reliance Industries?
Yes, Reliance Industries.
Okay. For somebody who had bought Jet Airways intraday, would you carry home the long positions?
No, it's too volatile. I would book out, Neeraj.
You would book out?
Yeah.
Okay. Interesting. Sumeet, Bagadia, final thoughts on the couple of auto names which have done well today, Maruti Suzuki and Tata Motors. I'm sticking to large caps today. I'm just not getting that comfort of talking about a clutch of mid caps right now. But these two large cap auto names, would you do anything there?
What I can sense looking at the Maruti chart is that Maruti can give a good move from here on. Maruti is quoting at around 74.10, 74.20 levels. I think from here on we can see a move till 77 or 7800 levels. One can initiate fresh long positions in Maruti at the current market price. If there is a dip of around 100 points from present levels, then that should be used as a buying opportunity. The immediate resistance for the stock is placed somewhere at around 75, 75.20 levels. A closing above 75.20 will take stock prices to 7800 or 8000 levels in next couple of days. So for a trading perspective, for next couple of days, one can initiate long positions in Maruti at the current market price. And I think we should see a good move in next 1 week to 10 days time horizon.
Stay on, gentlemen. Let's start wrapping up the markets for you. About 212 points lower for the Nifty Bank. Nifty 50 about 50 points. Sensex about 1/3%. We are off the lows of the day, but for the banks, I know there have been a couple of buy calls that have come on the banks, so maybe on the charts it looks attractive, but somehow Nifty Bank has looked the wobbliest of the lot in today's trade. I don't know if there are specific news on pockets like Axis, etc., which may be day specific, which may be weighing in, and maybe tomorrow it bounces back. But for now, Nifty Bank has looked the weakest. The mid caps and the small caps too have fallen a little bit, but not as much. Look at the small cap index, just about 1/3%. So the fall has not been that steep, but the market breadth 2:1 in favor of the declines. Let me talk about the large caps first, then I'll talk about the mid caps and the small caps. On the large cap end of the market, what's done well is Yes Bank, about 6 percentage points higher. Infosys 2.5%. Sun Pharma about 1.5%. Bajaj Finance 1.3%. Maruti is down up about 1%. Tata Motors has looked about 1% higher. Good going there. And IOC about 0.75%. What's not doing well? IT is being taken out. So Wipro, Tech Mahindra, and the TCS down below, all of them have looked slightly wobbly. Commodities like Vedanta and JSW Steel have looked slightly wobbly. And Larsen & Toubro weighed in, I presume, by the Suti news, is down about 2.5% as well. So that's the list of names at the large cap end of the market, which have looked slightly weak. Now, what about the mid cap and the small cap end of the market? I think, what about specific pockets of strength and weakness? Let's just first get the indices and the top 10 movers on the mid cap and the small cap end of the market, and you will see what I'm talking about. So the Nifty mid cap 100 about 0.4%, the lower in trade. And look at the losers. There is Dish TV, which corrects. Avenue Supermarts is not in this index, which is not present here, but Dish TV corrects. Federal Bank, because of the resignation of the key personnel, corrects about 5%. Prestige Estates down about 4%. Manappuram Finance, remember, these were amongst the best performing stocks the day before in Friday session of the whole of last week, but correcting today. Grab Finance, after finding stability for 2 days on a trot, correcting in the session today. Hexaware down about 3%. What's doing well? Castrol has gained about 5%. Vakrangi, it's been on an upper circuit now for 3 or 4 days after getting the clean chit. That one is up about 5%. Aditya Birla Fashion about 3%, not bad going. Mindtree bounces back a little bit in the session today. And Page Industries sees some buying today, so up about 2%. What about the small caps? Let's bring those up and see what's happening to that index. Jet Airways, 15% higher at close, really strong show. Stride Sashun about 8%, not bad going. After a while, I'm seeing a cement name amongst the top performers on any index, but up about 4% is JK Lakshmi Cement. NIT Tech, along with Mindtree, has done rather well for itself. What's not done well? Lux Industries continues to grind lower. Gen Irrigation continues to grind lower. And some weakness for Repco Home Finance. Both Repco and Gru have corrected in the session today. Equitas too has looked slightly weak in trade. So specific pockets of weakness. Lastly, before we wrap up, can't not show Avenue Supermarts. If you can just pull that stock up, because frankly, aside of Jet Airways, it's Avenue Supermarts which throughout the trading day today has stood out as that one sore spot. 11.5%. This must be the weakest or the top percentage fall that I've seen for Avenue Supermarts in a really, really long time. So not the best of days for this one. But the markets have shut shop, and it's not an unpleasant day, but the Nifty Bank, we probably could have had a bit more coming in for that index. Bring up this is of course the Nifty Bank. Bring up the volumes in today's session, then the market breadth, and then the top contributors. The volumes, the cash market volumes left a bit to be desired, just about 25,000 crores. So not the best volume picture in the session today. What about the advanced decline ratio? 2:1 in favor of the declines. Yes, about 557 and 988. So near about 2:1 in favor of the declines. And the contributors, so Larsen and Toubro and HDFC. HDFC a heavyweight, ICICI Bank a heavyweight, TCS corrects, but L&T down about 11 points on that overall fall. What's contributed on the upside? Maybe a bit of a lone ranger for Infosys, though I would say Yes Bank gave it adequate company. But aside of these two, we didn't have too many other stocks which kind of really participated in a big way, and which is why the gainers list is looking a bit thin. This brings us to the question, though, of what happens in the next few days. Sumeet Bagadia, I will want to come to you first. Nifty Bank, it was not just you. A couple of other people too had recommended a buy, but it's looked wobbly. What levels on the downside would you watch out for when it comes to the Nifty Bank?
The Nifty Bank has support at around 27,100 levels. Closing below 27,100 levels will take Nifty Bank lower. Till the time the supports are not taken away, it's better to be on buy side. Such dips in Nifty Bank of 100 to 200 points should be used as buying opportunity. Immediately, the index has resistance at around 27,400 levels. A closing about 27,400 will take Bank Nifty to 27,700, 27,800 levels, or there is a possibility that we might see levels of around 28,000 also. I think those who have taken long positions, they should hold on their stop loss at 27,100 levels for the upside target of 27,600, 27,800 levels. And tomorrow, if we see a good move, then one can initiate fresh long positions also with the same stop loss for the targets of 27,600, 27,800 levels.
Okay. And actually, I'll ask the same question to you, because the Nifty Bank has been, quite frankly, in the thick of things. I don't know if you believe the Nifty is a better index to trade right now or no, because your strangle was on the index. What would be a better index to trade, and what levels would you watch out for specifically?
Yes, I think I totally agree with you, Neeraj. I think the Nifty would be a better index to track. I think the downward breakout just didn't come in. And as far as the Bank Nifty is concerned, 27,165 is crucial. A small bounce is in the offing. Post that, if it breaks 27,165, I think it's going to tank. So I would be bearish on the Bank Nifty. And I would have no trade on the Nifty, but if I were to trade, it's a better. Like I said, I'd sell a spread rather than take a positional trade at this point in time, Neeraj.
Okay. Gentlemen, we'll leave it at that. Thanks so much, Hemen, as well as Sumeet Bagadia, for joining in today and giving us your thoughts. Really appreciate your time. And viewers, thanks for tuning into this leg of Countdown. From all of us who put this show together, thanks so much for watching. Stay tuned though. The Market Wrap with Agam Vakil is coming up next.